Hedges, the primary and weekly options model portfolio manager here at TGO. And why do I sound so happy? The market's imploding, right? I've been talking about this for some time now, that we're way oversold, and we're due for a nice little clearing of all the kindling, so to speak, in the market. Here's what happened yesterday. Quick debrief. So yesterday, the Fed came out with their minutes from their last meeting, and they essentially said what I knew they were going to say, which is they're really starting to get creeped out about the effects of all this quantitative easing, all this liquidity, this literally money that they're printing out of in the air is doing to the market. And I use the analogy, guys, that the Fed chief, Bernanke, is a bartender, and the market is a bunch of drunks, and he's just feeding them free rounds, free rounds, free rounds. And yesterday, looks like the guy looked at his watch, started cleaning some glasses, and was thinking about calling last call. And the bar goes crazy, right? So that's what happened yesterday. Yesterday afternoon, right around 2, the FOMC minutes came out, and you can literally see where this happened with the VIX. So market was off a little bit yesterday, and then right around 2 o'clock, right here, we saw a 20% spike in volatility, the largest spike in volatility in nearly 2 years on the VIX. And you can let's overlay the SPX, what the general market did as the VIX. So as the SPX kind of imploded here, look at that. The VIX just went through the roof. SPX down 1.5%, the VIX up relative to the SPX going down about 26%. Awesome, awesome move. Why do I sound happy? Well, guess what? I was hedged. In a lot of our model portfolios, we have hedges on VIX, because I knew, folks, when the VIX got around 12, 13, I say something that when I say it, I teach my Top Gun options traders to sit up and start paying attention. It's nuts. Volatility below 12 or 13 is nuts. It cannot stay down there forever without the second coming of Christ, Buddha, and Zeus. Okay, volatility cannot stay that long, suppressed for that long. Okay, and when vol's cheap, you buy it. When it's expensive, you sell it. And now we're looking at nearly a 23% move in volatility in just 2 days. And folks, this was just off the FOMC saying, hey, the party might end soon, and we might call last call. If you remember, folks, the last time the FOMC came out with their minutes like this, they said the exact same thing. Some of the Fed governors were saying, you know what, we might be doing a little more damage than good with what we're doing. But again, folks, you know, the Fed chief also, and the Fed likes to telegraph, right? They don't want to wake up one day and go, oh, by the way, we're done with our asset purchases. That $85 billion a month we're injecting into the market ends tomorrow. The market would, as regular viewers and all you at Top Gun Options know, that I believe that if this market were left to fend for itself instead of this pseudo market capitalism we have, the Dow would be at maybe 6,000 if we're lucky, and the SPX would be at 750. Period. But all of this underneath here is built on air. It's built on puppy dog tails and pipe cleaners. It's crap, and it's going to end badly. And as you can see, based on yesterday's market action and a little bit of a follow through today, market's off 60 points, Dow, SPOOs are off about 8. We're seeing a little bit of a follow-through. I don't think this is the big one, guys. We saw some other economic data come out today, a slew of it before the market opened. Core CPI unemployment claims unexpectedly went up about 20 grand from last week, and obviously up about 10 grand from, or 9 grand from what was forecast. CPI, inflation's in check. Manufacturing PMI still okay, kind of in line, but essentially flat. Existing home sales, a little bit of a green shoot here, but the previous month revised down. Okay, and the Philly Fed absolutely imploded. Not good, not good at all. The Empire State Index has been up and down, showing positive and then imploding. The Richmond Fed, the Chicago PMI. So these, you know, different Fed manufacturing indices are, they're really porridge, guys. They're hot, they're cold, and then they're lukewarm. And this one is also why the market is remaining a little suppressed right now. Tomorrow, all quiet on the Western Front, which means I think that we see a little bit of a relief rally. Like I said, I don't think that this is the big one. To use a Sanford and Son reference, you know, I'm coming, Elizabeth. It's the big one. This isn't the big one, guys. Sequester, the budget fight, is going to be a bigger pullback than this. I think people are going to use this as a buying opportunity. Seeing some other green shoots that I want to talk about, guys. Google, slew of price upgrades. People calling for Google 1,000, which might be the kiss of death. That happened to Apple around this range, well, about around $700. As soon as they called for Apple 1,000 and Apple's it's $700, I said sell the hell out of it, and turned out to be pretty right on that one. Google, not sell the hell out of it. I think 1,000 is way too lofty. I think it's currently valued fair value for Google. Something else I want to talk about, though, that's been on a lot of people's minds, gold. Gold is, you probably have heard this term before, the golden cross, right? Or a death cross. The 50-day moving average for the GLD is crossing the 200-day, and that's never a good thing. So seeing some 150 guys in the GLD is really support. That's the beachhead, in my opinion. We're catching a bid today on some inflation news and kind of on a little bit of a flight to safety. I've told my traders I think $1.50. 160 was short-term support, and we've breached it with some velocity. So there you go. There's that 160 level. We bounced off it, bounced off it, bounced off it, and then raged through it. This 150 is secondary support, and I think we're hitting it. It's catching a bid today. So I think the sell-off in gold abates, and we start moving laterally on the GLD. If you remember, guys, about a year ago, we've been trading the heck out of the GLD in just about all of our trading services. Here was that range, guys. We were doing iron condors on the GLD like you read about in GLD Iron Condor magazine, and it was doing extremely well. I think we're going to channel like we did this time, or not this time last year, but more spring and summerish. So we're going to get back into trading the GLD here. I got out of the way of trading the GLD. Perfect timing because of that, and I knew it was coming, and TGO traders knew it was coming because we talked about it. Good stuff going on at TGO. Like I said, we had great hedges on with the VIX in our primary live trade brief model portfolio, and also on SDS. The SDS, obviously, in the past couple days, look at that, guys. It really has bottomed out and really caught a bid here based on the market imploding. If you don't know what the SDS is, it's the ProShares Ultra Short S&P 500. So as the S&P implodes, the SDS goes up. So look at that. So as soon as the market started to implode yesterday, the SDS market down 1.5%, SDS up nearly 3%. So that's what we mean by ultra short. So the SDS is a great potential hedge for if the market's going to implode. So, you know, potentially look at having that as part of your arsenal. But again, I'm happy. Why? The market took a torpedo in the side of it, and our bilge pump, so to speak, turned on perfectly, and we didn't get as hammered as everybody else did, which is how you live in today's market. I want to give you a quick heads up, guys. Our strategic partners over at Market Tamer, having how to have a positive expectancy portfolio. If you don't know what expectancy is, you really have to take a look at this. I'll have the market or the video redirect to this link, but if it doesn't redirect, go to markettamer.com/expectancy-report1, and you have got to read this, okay? How a positive expectancy portfolio could help you end this year in the black, which obviously this is going to be a critical year, guys. I think Israel and Iran comes to a head. I think the Eurozone comes to a head. I think we have our own Eurozone in California and Illinois. So this year is going to be a very interesting year, including our sequester, budget fights, and a bunch of other stuff on the radar. So go to this link right now, download this report, and they're going to have some webinars coming up as well that I strongly recommend that you attend, okay? So again, great stuff going on in the model portfolio. We're having a Braveheart hold moment with a lot of our weekly options because they got kicked in the gut yesterday. Now they're not necessarily getting kicked in the gut. So weekly options model portfolio, we put this Google trade on 2 days ago. It's up nearly $1,000. So happy with that. Getting a little kicked around on an Apple Iron Condor, an SPX Iron Condor. I really don't care because these expire tomorrow, and we're collecting a whole bunch of theta even as I'm talking to you throughout this video. So the weekly options model portfolio still looking good to go. These are what I call lucky strike moments. If you want to trade weekly options, guys, you've got to be able to take a drag on your cigarette, relax, and let the market play out. If you have a sound strategic mindset, relax and let it fly down range. Okay, got to run. Got a lot going on here. Got some live trading to do. Got some trade alerts to send out and manage some trades as well in this volatile market. I love it. Volatility's back. It's back with a vengeance. So for everybody who's like, well, you know, the VIX could go lower from 12, and I said it won't. Folks, the market went down, 108 points yesterday, and the VIX exploded 20%. Okay, this wasn't like a 300-400 point down day, which we could potentially see for a whole host of reasons. The VIX popped 20% just on a slight triple-digit decline. So if you're not prepared, guys, if you're not hedged, that's why I use this as a tagline: happy hunting and make sure you hedge. Go out and fight. Happy hunting. But folks, if you don't have an ejection seat, you're going to get killed. And yesterday, took a little hit to some of our portfolios, but with our hedges, minor hits. Matter of fact, we had blinding green trades on the VIX and SDS yesterday. Okay, so I got to run. Happy hunting. Make sure you hedge, and I'll talk to you tomorrow for Friday's market wrap-up.